Hey, everybody, welcome back to another fantastic edition of the show. Thank you so much for tuning in and locking in with us here at the His and Her Money Show. We know you could be elsewhere, but you're here. And for that, we are grateful. If you hear something today that is mind blowing, that you know your people need to hear about, please do us a favor and share this all over the interwebs. No matter what platform you use, our handle is at His and Her Money. Tag us, and we will show you love right back. We're going to be dealing with some money stuff today because, you know, our motto here is to take dominion over your money and your life. And we like to have conversations to help you think inside and outside the box, help you to strategize and formalize a plan to not just make more money, but do some things that are strategic and intentional to help you keep more of the money that you make. And we have two special guests today to help us have that type of conversation. We're going to be talking with Michelle and Shania, and they're here to help us to learn how we can save like thousands and thousands and thousands of dollars in taxes, but do it legally and ethically. That's right. You can save taxes without going to jail. And we're going to talk all about how to do that on this episode. So as always, get your pen, get your paper or your note-taking device and get ready because there's a bunch of gems about to get dropped and we don't want you to miss not one. So let's get Michelle and Shania on so we can hear all of their fantastic advice in this direction. Hey, Michelle. Hey, Shania. Welcome to the His and Her Money Show.
Hello. Thank you so much for having us.
We're glad to have you here because, man, we're pushing up against tax time. And for a lot of people, we have a one-track mind when it comes to taxes. And we want to help maybe do some paradigm shifting with this episode. And that's why we reached out to y'all. And we were glad that y'all were able to make some time for us. But for those who are being introduced to you all for the very first time, can you say hello to them and let them know what you all are all about?
Okay, so hello. I am Shania Wilson, aka the People CPA. I'm a certified public accountant coming from the state of New York, born and raised in the Bronx. I'm currently the CEO and founder of FOLA Financial, a financial services firm dedicated to helping creatives, entrepreneurs, small business owners, and professionals with navigating their financial journeys.
Yes. Hello, everyone. My name is Michelle Valbrun, aka Money Making Mitch, certified public accountant, tax strategist, and award-winning author, and founder and president of the Valbrun Group, basically helping you save 5 to 7 figures in tax legally and ethically, and helping you increase your generational wealth. Originally from South Florida, and currently a resident in ATL, hot Atlanta. Right now it's cooling down, but yeah, currently in Atlanta, and from Haitian descent. Grew up in a single-parent home with my mother. And, you know, I'm going to probably maybe break down my story a little bit later, but just basically, fortunately been able to create and be able to help, thousands of people save tax legally and ethically. So that's what we do.
Good stuff. Well, let's deal with it now for both of you all. We can kind of see that you all have figured this money thing out in your current state, but take us back, was this always a thing? Were you always money conscious? Did you learn some lessons early? What is you all's money story that allowed you all to have the knowledge base that you have that you share with people today?
So honestly, for me, growing up in the Bronx, money was not talked about in the right direction. People that I was growing up with were talking about getting money through hustling, getting money through doing things that are illegal. But as you know, we know from growing up in the hood, people end up in two places. And I wanted to end up in place 3, which was with the wealthy, right? Because we all watch movies and TV shows and we aspire to have lives that these celebrities have, and we can have those lives or even better if we're focused on our money, focused on our coins. So as people love to say, the teacher always tell you to focus on your own paper. So rather than looking at these celebrities and gaining inspiration from their lifestyles, my goal was to help myself create that for myself, but then more so to help the people create wealth in what wealth looks like in their eyes by leveraging their personal skills, their personal businesses, and creating wealth in their own platforms. So that's pretty much what I do, and why I do it is because it's not commonly talked about. So let's make that a common subject.
Love it. Love it. Yeah. And really, really with me, my story kind of goes back to Miami, Florida, right? So as I mentioned, my parents are from Haiti, came to the United States. Coincidentally, they actually owned a tax business. And one of the things with that tax business is there was an experience when I was very young. Basically, long story short, we were actually held at gunpoint, right? So our family, we were robbed. And the reason why that was is because my dad, used to keep a whole bunch of money in a shoebox. He kept a whole bunch of cash in a shoebox. We had that experience, but one of the things I found out with that is that he actually had that money in the shoebox because he didn't want to pay taxes, right? So he was doing it the wrong way. You know what I mean? And through that experience, I learned that I want to do things legally and ethically because I had to experience, visiting my dad in jail and dealing with this experience of the robbery and all these kind of things. So really for me, as you can imagine, growing up in a single parent household, my mother coming from Haiti, as far as finance and money talks were concerned, her only real advice was, Michelle, in her Haitian accent, Michelle, you have to go to school and you have to get good grades, right? And even though it was good advice, it wasn't the advice that I needed. So through that experience, I did a lot of self-learning, self-education, invested hundreds of thousands of dollars in education, because what you're going to find, what we're probably going to talk about too on this episode, is that, just because you went to a university, a great school, doesn't necessarily mean that individual understands everything as it relates to saving money on taxes, right? In my experience, the educational system, universities and stuff like that, they educate you on how to work in corporate America, give you some overall principles as it relates to taxes or whatever the case is. So I have to do a lot of self-education to really understand how I can help people save more money in taxes legally and ethically.
Now, you just spoke about education. Both of you all educated. So am I. A lot of people listening are. And they excel in school, and then they excel on their jobs, but they may not necessarily excel in personal finance. And maybe nobody taught them that. They learned a lot of things, but they didn't learn that. But now they're on the journey to gaining that information and gaining that knowledge. And on that journey, you find out about things like maybe debt or savings, maybe even investing. You don't hear a lot of conversation about taxes. It's not a hot topic for most people on their journey to becoming more financially literate, for more financially astute. Why do we need to actually be making this a part of the conversation, taxation, when it comes to trying to get to a more sound place financially?
So the thing about understanding how to properly build wealth is that it's built in two directions. It's number one about how much money you make. Yes, so let's go ahead and increase those revenue streams. Average millionaire has 7. Let's figure out how we can turn our side hustle into a business. Let's definitely go ahead and figure out how can we put more money in our pockets. But we don't talk enough about how do we keep those money in our pockets, right? A lot of times we put money in our pockets and then they're like, oh, well, where did it go? Is there a hole in my pocket? You got to flip your pocket inside and out and be like, hey, where did it go? And a lot of times that extra money that we spend goes to taxes, right? So it's very important to understand that building wealth happens from two angles. It's about how much money you make, but then also how much money you keep. You want to make sure that you're keeping as much as you can so that you can go ahead and repurpose that and further your wealth building in other areas. The more you save in taxes, the more you now have to reinvest, whether it's in yourself, whether it's in your business, whether it's in your family. But you rather have the final say so and what happens with your money than giving it to Uncle Sam and letting him decide what to do with your money for you.
Let's go. No, I love it. And it's so important with that because Uncle Sam, essentially, he's kind of like this business partner that you didn't sign up for, right? Y'all basically get into business, and he's like, this is the rule. What we're going to do is I'm not going to do any work for your business and for you. I'm going to provide, different amenities or whatever the case is. But at the end of the year, I'm going to get a percentage of what you make. And this is the thing about it. So we talk about when it comes to personal finance, one of the things is cost cutting, right? We talk about cutting costs as it relates to our mortgage, our debts, children expenses, all these kind of things. But when you really think about it, break it down, taxes are your single largest expense, right? And I always share this. When you make money, you pay income tax. When you buy something, you pay sales tax. When you buy property, you pay property tax. When you sell the property for more than what you pay for, you pay capital gains tax. And then when you die, right, someone could be paying estate tax, right? So we have all these different taxes, and if you don't have a proper tax plan and strategy in place, that could be over 50% of your income. But guess what? Even bigger than all those taxes combined is what I call ignorance tax, right? And ignorance tax is a tax that you pay by not understanding the tax code, by not understanding how to save money on taxes. So really, what you want to do and what you want to learn is how to save money proactively, legally, and ethically. Because a lot of times there's this misconception that the tax code is broken up for the rich and the poor. But I think that's kind of a myth, and I want to demystify. When it comes to saving money on taxes, it's really for the ignorant and the enlightened. So if we can get enlightened, if we get more knowledgeable about how to save money on taxes, then we'll be able to be in a better position. And then when it comes to saving money on taxes, generally speaking, it helps to become a business owner or an investor, because the tax code is geared towards, it benefits those who create businesses who are investing, whether it's investing in stocks or investing in real estate or other types of assets.
Good stuff. Now we're going to definitely get to the entrepreneur business owner out there, but majority of people out there, they got a job. They don't have a business. Do you have any advice, wisdom for the person who goes to work every day and maybe they have a business idea, but that business ain't started yet, but tax season is coming? Are there things, because I think that, let me back up. I believe that it's a dangerous conversation going on in the world where there is this pressure for everybody and their mama to become entrepreneurs. Ty and I preach that everybody should have more than one way to make money. You should have more than one way to bring income into your house. But that doesn't mean that everybody needs to quit their job and become an entrepreneur. At least that's the belief that we are under, and that's what we personally say, but to each his own. But for the majority of people out there that are headed to work and they still want to become enlightened, like you just talked about, because ain't nobody really talked to them about taxes. People have talked to them about saving money. People have talked to them about maybe even investing a little bit, but nobody has talked to them about being strategic with their taxes. Is there any wisdom for the person who's going to work and does not necessarily have a business right now?
So yes, of course. So the thing about it is, again, as Michelle kindly stated, that when you sign up to be a business owner, you do sign up to be in business with Uncle Sam, the government also. So obviously, if you're doing more things that's assisting the government, you're going to get more favorable tax treatment, which is why investors get tax credits and deductions, because they're providing housing, right? If you're a real estate investor, you are helping with the fact that a lot of people in this world don't have a place to live. You're developing that. Let's reward you. It's why you get favorable tax treatment. Same thing for business owners. Well, you are providing a platform that individuals can now utilize to help, make some more income. Let's give you favorable tax treatments. So same thing on the individual tip, you do get rewarded for doing things that benefit you. So number one, if you are a W-2 employee, make sure you're maximizing your retirement contributions. That's going to allow you to save a lot in taxes. And it does benefit you. If you have children and you're paying for childcare and independent expenses, you can deduct that. Additionally, if you're paying for student loans, you can deduct that as well. But really for individuals, they start to take advantage more so of the tax code when they move from being a person who takes a standard deduction, which we all get. So if you're single, that's $12,400. If you are married filing jointly, that doubles $24,800. Had a household, $18,350. However, you can itemize, and there's no cap on how much you can itemize, right? So to move into itemizing your deductions versus taking a standard, again, you have to be doing things that will benefit yourself, which is buying a home, for example. If you buy a home, now you can itemize your mortgage interest expenses, your real estate taxes, your PMI, etc. If you are paying out-of-pocket medical and dental expenses, you can itemize that as well. Any state and local taxes paid. And also, if you are somebody who loves to give, you can also deduct your charitable contributions. Because now with adding in these extra deductions, because you move from being a standard deduction taxpayer to an itemizable deduction taxpayer, you can now increase your deductions by an amount that surpasses the standard by a whole lot, which will lower your taxable income and overall lower your tax liability, hopefully giving you a higher refund. So just to recap for individuals, your best tax strategies will be maximizing your tax deductions, tax credits, and tax adjustments. Outside of that, you want to go ahead and open up your revenue streams, because each additional revenue stream opens up more pieces of the tax code. So now that you're an investor, you have investor tax rules. You have a business, you have business owner tax rules. So diversify your income, and you can now utilize more pieces of the tax code to work in your favor.
Yeah, I would just quickly add on that, because she said a lot, and she literally dropped all the gems. But just to quickly wrap that up, yes, maximizing your retirement. Many of you have 401ks, right? That's going to be a pre-tax contribution that you can go and make, right, up to $19,500. And then you can also put money into, you can also open up what's called a self-directed IRA, which is something that you can open up outside of your job. That's going to help you save more money. Again, you would save money on taxes today, but you're going to defer the taxes and pay them in the future, right? And one of the things with the standard deduction, you have the standard deduction, itemized deduction, the standard deduction amount for that single filer Shanae mentioned, that $12,550, and then they actually increased it due to inflation. Unfortunately, there's been crazy inflation this year. They increased that, but the itemized deductions is what's going to be key. It's a little bit more difficult to itemize. And just to recap what she said, with the itemized deductions, you really have 5. I'm big on acronyms, so I'm going to be using a lot of acronyms. But the acronym for itemized deductions is MITCH. All right, not to be self-serving, but it literally lines up. I found that out one day. I was like, oh, it's MITCH. So medical expenses, as Shanae mentioned, interest paid during the year, taxes paid during the year, charitable contributions is C, and then H is help. So casualty losses and stuff, things that happen to your home, you can get a tax deduction for that. But really, as Shanae mentioned, really that benefit of opening up that business is going to allow you to be able to save more money on taxes. Then you can deduct for business expenses. And really, a lot of times, there's things that we're already doing in our personal lives that we can turn into business, right? So one of the things that I enjoy doing is financial literacy. When I first got started, I was reading a ton of financial literacy. I was like, why don't I just educate people? So I hosted my own workshops on the side and was able to then begin deducting for things like the office in my house, or for the office space when I'm teaching, and materials and whiteboards and all these kind of things. So yep, it really, a lot of times when we hear business, we get overwhelmed. We think about the Walmarts, we think about the Facebooks, or metaverse is what they're calling it now. But it doesn't need to be that big. It can literally be something that you can just start and go ahead and begin taking advantage of, as long as you're in the pursuit of profit and income.
So, you all teach and help people do this legally and ethically. So you just mentioned, like, it's important at some point to try to make that migration either to the business owner or the investor, or maybe a combination, in order to position yourself to be able to take more advantage of the tax code that is written to be advantageous for the business owner or the investor. Now, you just said, maybe you're already doing some things that could be deemed as a potential new business. How do we, maybe some bell just went off for somebody, like, yeah, I could, do workshops on this or that. I can create an online presence that teaches this or that. What are some steps to make sure that we are set up legally and ethically with this new business idea to make it an actual business, to then be able to take advantage of the tax situation that is geared towards us?
Okay, so essentially, in getting set up, it really just depends on how in depth we want to get in the venture, because you do not have to have an LLC to operate as a business. In fact, as soon as you are in the pursuit of making money, so as soon as you're like, hey, I'm about to charge you for this one service, you are now operating as a business. And there's a default business structure that qualifies you, and that's going to be a sole proprietorship. So once you start to conduct business, LLC or no LLC, you are classified as a sole proprietor, which will allow you to file your taxes on the form Schedule C. On that Schedule C, you're adding your income from your sole proprietorship all your expenses, and then that net loss, because it's ordinary income or net profit, will get added towards your taxable income from other ordinary or non-ordinary sources, and it'll be added into or subtracted from the amount of income that you pay taxes on. So sole proprietorship is a pass-through entity. You pay taxes on that from your individual return. So essentially, if you want to do the LLC route and incorporate, you can file that with your state. Go to your Secretary of State website. You now incorporate, get an EIN number online, open up a business account. Now you're operating as a business through a business. And the benefits about operating through a business is now you get legal protection. So sole proprietor versus person with an LLC is, guess what? If I'm a sole prop and somebody sues me because I made a mistake, they now can come after my personal assets. If I have an LLC and I keep it separate in facts, they have to sue my LLC first. And if they get lucky, they can try to get to me. But, you know, if you do the right things with your entity, the whole purpose is that they never get to you personally.
Yep. And just to quickly add on to that, so I think that's a great first step for people who are doing it as a side hustle. And then to expand upon the legal entities, right? So you have that LLC, limited liability company. You also have the corporation on that as well. And then as far as tax entities, you can be taxed as a S corporation and a C corporation. I'm just going to speak on the S corporation real quickly because that's probably going to apply for most business owners. But you know, if you happen to make more than, I would say, $50,000 in profit, consider switching over to the S corporation. The reason why that is because one of the drawbacks or one of the things that happens with the sole proprietorship is that you do pay what's called self-employment tax. That's 15.3%. So by switching over to S corporation, that can be an opportunity for you to go ahead and save. There's a whole process. Just make sure you work with a professional on that. But yeah, it's really, as Shania said, that simple, right? So as long as you're in the pursuit of profit, you go ahead and do that. And you just want to make sure, if you haven't set up that legal structure formally, you know, you just want to make sure you're tracking your expenses and understanding the requirements to be able to deduct things for your business. So I think it's important notes. I'll quickly run through this. So as far as what you're able to deduct for business, right, the IRS has 4 requirements. I call those tax-free expenses, tax-free requirements. The first thing is the expense needs to be for your trade, business, or profession. The next thing is it needs to be considered regular for your business. Third part is it needs to be considered essential. And last but not least, it needs to be economical, meaning that depending on how much money you're making, the IRS is going to judge whether it makes sense for you to be able to write things off. So one of the things you could do is write off like a G-Wagon, a vehicle that weighs over 6,000 pounds. If you're making less than, if you're making $1 million, that's probably easier for you to write off versus someone who's making $10,000, because again, that's going to be seen as extravagant or lavish for that particular situation. So again, just making sure you're reasonable and using rule of thumb is going to be key.
So let's talk about, because these are the trending write-off topics, right? Cars, trips, and clothes. Everybody want to write that stuff off. I don't think you can write all that stuff off. So give us some rules and regulations. You just touched on it when it came to the G. So if I make 10,000, I can't write off a G-Wagon. Can I write off a Ford, a Chevy? So talk to us. What can't, because there's a lot of people saying a lot of stuff on the internet. Everybody can kind of make themselves sound official. So give us the real deal Holyfield when it comes to these here write-offs.
Yeah, so the thing about writing stuff off is, as Michelle said, is you don't want things to be classified as being super extravagant and lavish to the point where the IRS is questioning you, like, okay, you deducted this, now your net income 0, but you can't sustain this type of deduction again and again, right? So that's very important. But yes, you can legally write off things like G-Wagons. You can even go as far as writing off a private jet. And this all just depends on how much you make, how much you net, and how you operate your business. Because anything can be a tax deduction as long as it's both ordinary and necessary, meaning that in your field of business, it's an ordinary expense. I can't be an accountant trying to write off a cost for a horse. I'm going to leave that to the farmers, right? So that's not ordinary. But however, a laptop in my business is ordinary, right? Buying a calculator, that's ordinary. I'm sorry, I was recording. I had to. But then we have necessary, meaning that you had to incur that expense to help you make money. I can't operate without my laptop. I don't even go to the nail salon without my laptop, just in case somebody calls me and I got to get to work, right? It's very important. It's necessary for me to make money. So as long as your expense is those two things, you can deduct it. Now, the thing about deducting is that depending upon the actual expense, it's not going to be treated the same. So you can't just buy a vehicle and just write off the whole thing if it does not fall into certain qualifications. So for example, to take advantage of Section 179, which is depreciating, where you're writing off your G-Waggy all in 1 year, that vehicle has to weigh more than 6,000 pounds, and it has to be a vehicle that's listed under your business and placed in service, right? This does not mean you cannot write off a vehicle that's less than 6,000 pounds. There's just different rules for it, right? So with this vehicle, you may be only able to expense your lease payments or your gas or your tolls, and then you depreciate it over a specified period of time because it does not qualify for that 6,000 pounds. So whatever your expense is, they're not all treated equally, even down to meals, right? This year and next year, meals are actually 100% tax deductible, but previously meals are only 50% deductible. So that's why it's very important to have a CPA or tax expert on your team that's knowledgeable on how different expenses and incomes are treated, because they're not treated the same, and you can find yourself in trouble by not following the appropriate tax codes for your income or expense item.
Yeah, that's amazingly said. I'll just add to just to make it more practical for you all. So, as far as general expenses that apply to most people, as Shania mentioned, supplies are really good. Advertising, whether it's Facebook ads, doing traditional ads, or whether it's a magazine, radio is going to be something that you could deduct. You can also be able to deduct for business travel. So if you're traveling for business purposes, going to a conference, seminar, you're able to deduct for that. That's also going to include the hotel, lodging, etc. As long as the primary purpose of that trip is for business meals as well is also acceptable. One thing you can also do is be able to pay your children through the business. You can pay them up to the standard deduction amount if they're under the age of 18. And IRS doesn't have officially an age minimum, but I recommend age 7 because the youngest, because there's a court case out there for that. So really, again, just making sure that you're using your judgment. There's a saying that I want you all to think about and remember is that pigs get fat and hogs get slaughtered, right? So you could be a pig. You want to make sure you take advantage of the tax code, see what's out there. But if you're a hog, if you're greedy, if you're trying to push it too much or finesse too much, then that's when it's going to, come back at you, right? And you're going to probably have to deal with an audit. So that's something to consider as well.
Yes, Michelle, I think you missed one very, very important common expense. It's your CPAs.
Oh, yes. I forgot that. That's the most important. Yes, the most important.
Guess what? We're a tax deductible asset. So
yes.
You get the tax deduction for having an asset on your team to make sure that you are maximizing all of your tax deductions, but again, not being a hog. We want to be little fat piglets.
That's right. But yes, that's considered professional and legal services. So totally legit and totally something that you all need because, right, that's going to help you go ahead and pursue that profit and pursue that income in your business. Thank you for the reminder. That's,
Got your back.
So let's dig into something controversial for our platform. Ty and I hate debt, right? We don't got none. Ain't had none in a long time. But there's different calculations that happen to you when you become a business owner. So you're talking about the car thing, okay? So we're contemplating the car thing. Do we just do what we've always done? Just roll up to the dealership, pay cash, and leave? Or now that we're business owners, I even hate the word lease, but should we consider a lease? Or should we consider it buying it in the business name because of this tax thing or that tax thing? So how do we properly analyze the three options, lease, loan, cash, as a business owner?
All right. So I'll just start with one that Michelle, he'll take it away. But honestly, I'm going to start with what you should be thinking about. Because before we make this decision, it's number one, what's your business model? What's your business future plans, right? That determines a lot. Are we looking for tax benefits right now? are we looking for tax benefits next year or the years to come? Because if we're looking for them right now, then you will probably want to think about financing or purchasing so you can take advantage of having a deduction right now. If you are thinking more long term, now we can look at whether we're going to, finance a vehicle under 6K over a period of time and depreciate, or if we're going to lease. And then, Michelle, you can talk a little bit more about even actual versus standard costing when it comes to vehicles.
Yeah, absolutely. So there's multiple ways to do it. I think I did a post recently using the Jay-Z quote with that. I got a million ways to get it. Choose one. So yes, as it relates to vehicles, there's different ways you can do it. One of the things that you mentioned, well, let me take a step back with the debt conversation, right? So as far as it relates to business, debt could be seen as a potential benefit because it allows you to manage your cash flow better. So one of the things that puts a lot of companies at bankrupt is because they can't manage their cash flow. They don't have money. So by using credit, by borrowing, one of the benefits and one of the great things with that concept we keep talking about is depreciation. It's not necessarily how much cash you put out. It's just based on the purchase price, right? Up to the business percentage that you're using it. So as it relates to your different options, as it relates to your vehicle expenses, yes, you got the lease. The reason you want to consider the lease is if you are looking to be able to take those monthly deductions. So you're actually able to deduct the lease payment based on the business use of that vehicle, right? So you want to make sure you're tracking your miles. No matter what method you're using, you want to make sure you're tracking your miles. We're talking about the actual method, right? So that can be a way for you to be able to deduct it. If you are looking to take a big write-off, right, whether you get that expensive vehicle and take a big chunk for that year, and write it off fully within that year. If it's over the 6,000, then yes, doing it as a financing it and then using that section 179, what's called bonus depreciation, that's going to allow you to deduct it for the year. Or if it's under 6,000, then you can also include what's called you could also, if it's under 6,000 pounds, you could also deduct 18,000 up to 18,100 for the first year. 16,000 is a sliding scale up to the business use. So that is another way to do it. Then you also, which is going to be more practical and more probably easily accessible for that beginning entrepreneur, is the mileage method. All right, so that's what we didn't talk about yet. So the mileage method is you're able to deduct business miles for every time you're driving for business purposes, right? So you're able to deduct 56 cents currently for this year. You want to make sure you're using a mile tracking app, such as there's QuickBooks if you have that on your phone. There's MileIQ. There's several other apps that you can look into. And then you just want to make sure when you're driving for business purposes, whether it's going to that business meal, whether it's picking up supplies, whether it's going to a conference, etc., you're able to deduct that. And then even if you're not using, you have to choose one or the other. If you're not using the mileage method, you still want to track your miles because that's going to be evidence of your business use for that vehicle. So if you're saying that you're using 100% of that vehicle for business use, you want to make sure you're documenting that and showing that. That's going to potentially raise a red flag, right? So one way to maybe reduce that risk is to maybe actually have another vehicle, right, that you're using for personal use, and you also have that vehicle that you're using for business use. So you can legitimately say, yo, I only use this for business and I use this for personal. But yeah, that's a high level overview. Different things to consider, whatever the case is, just really depends on what you want to use it for. But the biggest thing I always let people know is because a lot of times people ask me about the G-Wagons, writing off vehicles and stuff like that. I was like, are you in the market for it? All right. So I know it sounds like you all are in the market for it, but if you're not in the market for it, I want to make sure you're actually in the market to do it. Or if you really have a big tax bill and you're actually wanting to put it to use, then I think it makes sense to consider it. So.
Oh, I can tell you right now, it's this doggone tax bill that's getting on my nerves. Okay.
Oh, yeah. That'll help.
We do have a question that came in from one of our pro members. If you want to be a pro member and be able to watch and ask your questions live, you can go to hisandhermoneypro.com. And this coming from a business owner. And actually, it's a question that Ty and I have considered as well. It says, how difficult is it to work with a CPA that's not in my city or state? What are the pros and cons? And so the heart of this question is, all CPAs ain't created equal. So maybe the folks in your area ain't getting the job done, and then you come across a Michelle or a Shania, but they don't live where you live. And so what are the pros and cons of working with somebody who's not from your state? Because there are some things that are, I guess, individualized at the state level in some situations where one state has a rule that may be different from another state. So what are pros and cons there?
Yeah, so the thing about it is that it's not more so about location. You really want a CPA that is really knowledgeable about your niche, right? But there's other things as well. Michelle breaks it down beautifully in terms of what to look for and how to look for a professional. So I'll have him reiterate that piece of it. But in regards to location, it doesn't really matter. You know, we're in a virtual world. Things all get done pretty virtual. And as long as just your accountant has a really good system, you'll be able to work with them no matter where you are. But what's more important is making sure that you pick the right professional for your business. That CPA that you're working with may not be bad. They just may not be the perfect person for you. They may be just used to doing simple stuff, right? We're used to doing heavy hitter complex stuff. So maybe we need to join them. Okay, I'm just kidding. But more of the story, location does not matter more so. It's really about, is this person a good fit for my organization? And more importantly, is this person elite?
Oh, what a segue. Let's go. Yeah. So as she said, elite. So that's another acronym that I love to use because this is the thing about it. So there is I'm big in hip hop, so I keep using hip hop references. So Meek Mill has a song called Levels, right? So there's levels to this as it relates to this tax profession. So not all tax professionals are created equal. There is different professionals out there. You have what's called a tax preparer. Tax preparer are individuals you typically see at these big box companies, whether it's a H&R Block, Jackson Hewitt, all etc. That may work for individuals who are making like $50,000, don't have a complex situation, whatever the case is, right? The thing about tax preparers is there's no rules or regulations to be a tax preparer. You can literally, as long as you are, I think, over the age of 18, you get what's called a P10. Then you are able to do people's taxes. So you all can go ahead and do people's taxes. You don't have to go to school for it. That could be a problem for a business owner, right? Because you want to make sure that you're working with the right professional. Then you have what are called enrolled agents. Enrolled agents, they take a 3-part exam with the IRS, very technically proficient. They know a lot about taxes, so they're good individuals to consider. CPAs, that's another level. The reason why I think CPAs are maybe a little bit higher than the enrolled agents, because you do have to go to school to be a CPA. You have to go to school for 4 years. You have to get a master's degree as well to be able to meet the credit hours, depending on your state. You have to work under a CPA for 2 years. You have to pass a 4-part exam that has less than 50% passing rate. But even that is not enough. It's not enough as a CPA. I'm a CPA. We're both CPAs. And not to put out the CPA business out there. We know what I'm saying. We about to let you in on the family secret. But not all CPAs understand business taxes, right? Like I mentioned, something that I had to invest a ton of myself in order to learn. So the elite is going to be the individual that you want to consider. The elite stands for E, education. Did they go to school for accounting and taxes? If they did, that's phenomenal. That's great. That's a plus sign. L is going to be legal representation. Can they represent you in front of the IRS in the event that you get audited? CPAs can do that. Enrolled agents can do that. That's a plus sign. I, integrity. Are they following the tax code with integrity? Are they doing things legally and ethically? Are they telling you to hire claim kids you don't got? You know, some of these spots, they be telling you, "No, I got, you know, if you need to add some additional kids, I got you. You know, just to get the child tax credit." It's a real thing. It's scary. It's crazy out here in the streets. So that's I. So make sure someone's making sure they're following the tax code legally and ethically. T is training. Are they constantly getting trained up? CPAs and enrolled agents are required to do that. And this is the most important piece is experience. Do they have experience with your particular industry? Do they have experience with your niche? And how long have they been in the game, right? So generally speaking, I think 10 years is a good benchmark. We've both been in the game for over 10 years. So that is a good benchmark to see if someone is knowledgeable. But to Chanel's point, they don't necessarily need to be physically there. We're in a virtual world. As you mentioned, especially given with COVID, a lot of our clients were remote. They're already remote, but, you know, it kind of forced us to even work more remotely. Technology is great. There are some nuances with the state, so that is one thing to consider. But generally speaking, most rules are going to be federal, which is at the overall country. But there's some nuances, like California has what's called a franchise tax. Delaware has some nuances and benefits for business owners, etc. But just you want to make sure you don't be afraid. I think the biggest overall takeaway is don't be afraid to check or press that person that you want to work with, right? They're dealing with your money. Tax is a serious thing. You want to ask for testimonials. You want to ask for their experience. Have you worked with this type of situation, or who have you worked with in the past? Do you have video testimonials, written testimonials about what you've been able to do? So
good stuff. Elite,
tax elites.
Man, we need somebody elite. We don't need somebody average.
No.
All right. So before we get into the rest of your advice, you all have this bundle that you put together because your goal is for everybody, no matter what their situation, to position themselves to prosper. So you put together a bundle. Can you talk about what's in it, what they'll find if they go and follow up with this product of yours?
Yep. So we put together the Full of Financial Freedom bundle. It has so much game. Even if you're not a business owner, you want to understand how taxes work and how to save if you want to go ahead and conduct business in the future, or to give advice to your business owner friends, or just to prepare yourself for the future of wealth building that you're about to do after listening to this podcast. So number one, you'll kick it off with 3 hours of video content. You will also be provided with 2 ebooks, and you will also have a tax spreadsheet to help you go ahead and organize your expenses. In the ebooks, there's also over 100 plus tax deductions and descriptions of why deductible and how to even expand that list yourself as well in that bundle. And then Michelle, you can go ahead and talk to them about what you talk about in your videos.
Oh, it's everything, y'all. So it's 6+ modules in the video, literally creating it's tax wealth, right? So that's something that people don't typically hear. But tax is a wealth building tool. I'm showing you literally how to create the tax savings into wealth. So how you can use that money that you save to now go ahead and put more money into retirement, to go ahead and hire your children, to be able to pass down to your wealth to your family. Because not how much you earn, it's how much you keep. You have nothing to keep. You have nothing to pass down. So that's the overall view of it. And again, it helps you save $10,000 to $100,000 in taxes legally and ethically if you go ahead and implement those strategies. And if business owners, 9-to-5ers, investors, whatever the case is, their strategies literally there for pretty much all types of people. So
Yeah. I put a post out on social media today. Ironically, it says that investing in your financial literacy is the best way to change your financial situation. So if what you just heard is something that you need to plug into, it's a knowledge that you don't have, then go ahead and pick up this bundle by going to hisandhermoney.com/financial freedom bundle. We will have the link in the show notes, or if you're watching us on YouTube, look in the description box right underneath this video. Again, that's hisandhermoney.com/financial freedom bundle. For both of you guys, I'm curious because y'all are passionate about this here conversation, and I can tell that y'all really want to help people. Why? Shake them. Why do we grab us and just shake us? Why do we need to pay more attention to this? Why do we need to not be on cruise control when it comes to our taxation situation?
I mean, honestly, we see so many celebrities, headline news, them getting slapped with $11 million tax bills from tax evasion from 5-10 years ago. A lot of the most infamous drug dealers in this country, they were not arrested for racketeering or murder, or they're arrested for tax evasion. Taxes is very serious because, again, just think about the fundamental reason why taxes are collected. I know we all hate to pay them, but taxes do provide for our public transportation, our public parks, public libraries, public schools that a lot of us do utilize. So it is a very important utility for, government budgeting purposes. And yes, there's legal ways and ethical ways to avoid them. But if you're improperly evading them, you're now putting yourself in your future and your wealth building journey at risk just because you are not properly paying taxes. Or on the contrary, you are also putting your wealth building journey, your future at risk if you are overpaying in taxes. Because again, it's not about what you make, it's about how much you keep. Because as Michelle said, you cannot pass down what you did not keep.
That's a fact. And that I'll just quickly add on to that. So yes, we talked about information, right? And really information changes situations, y'all. And we talked about when it comes to all of this stuff, all of these tax strategies and tactics out there, you guys go ahead and make the investment in yourself, because there's only 2 things that are certain in life are death and taxes, right? Conversations that we don't want to talk about, but they are certain, they are inevitable. Unfortunately, as you can see, so Joe Biden's looking to potentially increase He's looking to increase tax revenue over the next 10 years. That's going to potentially create some increases in taxes for individuals.
Now, what does that mean for the average person? That language might not have computed. Can you break that down, what that could mean for the average person?
Yes, I'll quickly share. So with one of so Joe Biden has proposed tax changes, right? He's looking to increase tax revenue by 2 to 4 trillion over the next 10 years. He's saying that he's going to increase taxes on individuals making more than 400,000. But as you can imagine, as you know, that is going to have a trickle down effect because business owners are probably just going to go ahead and increase their products and services, and that's probably going to potentially increase inflation. So what individuals need to know, maybe the individuals who are making under 400,000, the child tax credits have been expanded, so that's a positive thing. But there are going to be some small changes that are going to impact you. So really, overall, I would say make sure you go ahead and hire that tax professional, making sure that you're looking at your specific situation. But there are going to be some proposed changes because the House and the Senate are both Democrat. Joe Biden is a Democrat, so chances are that bill is going to get passed in some form. So just making sure that you're aware and being proactive on and keeping up to date and having that conversation with your CPA accountant is going to be key. But again, chances are, because to make up for the money that was put out during COVID and all these other things, the tax rates are probably going to increase. So just making sure that, really, as I mentioned, I talked about the ignorance tax, overpaying in taxes. There are things that you can go ahead and do to reduce that tax bill. So it's going to allow you to keep more money in your pocket to be able to do the things that you want to do, right? We don't have to necessarily, we have to pay taxes. I want everyone to pay their taxes. We're not telling you not to pay any taxes. Go ahead and pay the legal and ethical amount that you need to pay, but you also don't need to give the government a tip, right? So you don't need to overpay the government.
Huh? Come on now, somebody tweet that. Stop tipping the government.
You don't need
the
government to tip. They good. They got the money. They got the bread. They got a whole bunch of money. So you don't necessarily need to give them a whole bunch of extra money if you don't have to. So that's my take on it. And then again, with the financial freedom bundle and any type of investment in education and training, as a business owner, you're able to deduct that as well. We made it is for your business. It is considered regular for your business. It's essential because everyone needs to understand taxes, and it sure is economical because we made it very affordable for the people. So make sure you guys tap in.
So you also have a challenge coming up, right? A free challenge of some sort?
Yes. So I also have a free challenge for the people. So Pay Less Taxes Challenge. You can check that out at paylesstaxeschallenge.com. Basically 5 days of me going over ways that you can help save money legally and ethically. So breaking down all the different strategies that we talked about in more detail. You guys are spending over an hour with me. If you go ahead and upgrade to VIP, you get an extra hour Q&A time with me. I charge, thousands of dollars for a one-on-one consult. But you are able to take advantage of that if you go ahead and take advantage of that free challenge to get this information. So just something that I'm putting out there for the people. We're close to the end of the year, and also too, we have a new tax year coming up too. So just making sure that you're prepared to possibly save money by tax season, and then also being able to save money for the rest of the year.
And we'll be sure to have that linked in the show notes as well. Let everybody know where they can find you on the internet if they want to keep up with you. What's your social media platform of choice?
Yeah, so follow me on Instagram at The People CPA. Also, make sure you follow Fola Financial and download our Fola Financial app, available in your iStore, Apple Store, and Google Play stores everywhere. Definitely stay connected. In the app, you'll be able to get access to our exclusive content, blogs, etc. So definitely stay in contact there. Also, follow me on Twitter. I'll be tweeting sometimes.
Same handle?
At The People CPA, same handle.
Yeah, so you guys go ahead and follow me on all social media platforms. I'm mostly active on Instagram at Michel, MICHEL VALBRUN. Michel Valbrun. You can go ahead and check me out on Instagram. I'm always dropping free game knowledge on Twitter as well. And then the YouTube channel, I didn't get into, but I did a rap called The 10 Tax Commandments. Y'all go ahead and check that out. Inspired by the late and great Notorious B.I.G., but breaking down tax concepts in a lyrical form. I used to want to be a rapper, so I try to have fun with this thing.
All right, good stuff. We'll have all that in the show notes as well. Thank you both for taking time out of your schedule to break this knowledge down. We know that our people loved it. They're locked in. They are on the road to taking dominion over their money and their life. So I'm sure they'll be coming your way to glean more of your knowledge. But we appreciate y'all breaking this down on the show today. Thank you.